Good evening, ladies and gentlemen. Today is the 25th of August. It's the Wednesday before the weekly expiry. The month-end expiry. In January, month-end expiries tend to be relatively trickier. We opened gap up once again to a new all-time high type situation. And into the gap up, we saw quite a lot of put writing. But what is happening is given the option prices being so low, an up move is leading to a call side IV spike where every week is the same situation. We don't price in risk on the call side at all, and we continue to head higher. And into the up move, we're not really seeing puts fall off. So it's an expansion on either side. And basically, there are two reasons why I exit early. One, making any adjustments is really costing me. It's costing me between 30 to 50,000 to make a single adjustment. So if I shift my position around, the kind of slippage that I'm getting is quite high. And secondly, the hedges are very expensive. So even if I were to hedge like really far away, my hedges at the end of the day are going to lose money. So on top of like adjustments and hedges, I'm going to have to make money in the day itself. And I think my entry wasn't great. And after that, I've basically stuck in a point where I have to recover for that entry, and that's not going to happen. So I'm not going to push it that way. So that's why I took the exit. Now here in the intro, I want to address something interesting. So this is about how once we have a system, right? So once we have a trading system, the moment it doesn't work for us, like even on a short time frame, our first approach is to try and cut it out and do something else. Now there can be the right way of doing this and the wrong way of doing this, but let me just go over what the general thought process around something like this would be. So for example, my particular system of trading, which is non-directional intraday only types of trading, it has done really well in all the months actually since this thing. I think this is going to be my first break-even month since March of last year. So far it's slightly in the positive this month, but you see April was on this account. April was good, May was good, June was good, July was good, August so far at the end of the month we'll have to see, but so far hasn't been great, right? So after today it's going to be about a 1% profit for the month of August. Then I'm not considering that we're in a roaring bull market, so my portfolio is doing well to some extent. I mean, that is not something I'm going to exit at any point, so can't really be considered. Now, the first reaction that everyone has to something like this is, okay, maybe instead, why don't I switch it around and go long options instead? Create a long non-directional trade to benefit from the factor, because if we actually look at it, India VIX has fallen from April till now from 20 to 15. So India VIX has fallen from April till now. It has fallen from this range of 20 plus, slightly above 20 to below 13. So one idea would be, why not go long in a straddle, set a fixed target of 8 to 10 points and a fixed stop loss of 4 points. That could work, and that would be a no management trade. But the thing is, I would first have to test that trade at a very low volume for a long period of time before I know the perfect nitty-gritties. Of course, you know the other side quite well, but how you're going to react, how you're going to behave at different points is something that you don't understand. While you understand how the exact moves might take place, it'll be quite difficult to project exactly how that system is going to function. So the first idea should never be jump ship after having 1 month of underperformance, or what you consider underperformance to yourself. So that's one aspect. Secondly, I think what I'm going to do now, given the whole low volatility and low pricing of option situation, and of course with the fact that beyond September 1st, there is going to be no leverage available at all. So what is the point even? When you have a certain edge in an intraday system, if you're not getting leverage for it, what is the point? I will start allocating more capital to like fully hedged calendar sort of trades, wherein I will allocate probably at any point between 20 to 30% of my capital in these fully hedged calendar type of trades. And that's more on the lines of calendars, double diagonals. If there is individual high stock IV, then create like short IV trades on them. And that is going to have to be the approach. And as I speak right now, the market is shooting up, and right now this would have absolutely killed my position to a certain extent. So it's not the best risk reward for this system at this point of time. It doesn't mean I throw the system out and immediately pull up a new system. So I will sort of take this approach wherein I will follow the same system for now, but have like a much tighter risk management criteria and probably keep my sizing lower. I think throughout the entire month, I kept my sizing relatively lower. Just my last two trading sessions, I just upped my sizing, and that hasn't worked out so well. But it's okay. It was a conscious decision to do that and completely my own, wherein I felt like the spike in IV that we saw on Friday, there should be a relatively cooling off of that, and maybe we head back lower to India wicks of like 12 or whatnot. So that's about it. It's been quite a long rant, but I hope you had a good trading day, better than mine, and I will catch you tomorrow for the expiry. And even expiry, my idea is I'm going to keep it quite lightweight for tomorrow. So take care. Bye-bye. Have a great evening.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Time is 10 o'clock, and we gapped up with a lot of strength in Reliance right off the bat. So initially, a lot of strength came from Reliance and Bank Nifty. Reliance, one of the threats was 2200 calls, whoever are short, this being the monthly expiry, those getting covered. Bank Nifty as well opened with some strength, but now has headed to the day's low. But IT is showing a lot of strength. So IT now once again back to lifetime high territories, where this particular resistance, once taken out, is clear water. So that is there into the open. Huge amount of put option writing all the way up till 16,700. And what is happening at this point of time on the pricing of options is that so if you see my entry, my first entry was at the 16,500, 16,750. The 16,500 still, even at this point, has not given up any value. It's trading at the same price, whereas the 16,750 has expanded quite a bit. At one point into the upside momentum, I moved it up to 16,550 and then all the way till 16,600. But now I've brought it back, brought my puts back down to 16,550. Now the idea is more or less, if this expands, this call expands to the day's high, which is around 24, 25. Just before that, at around 23, I will take the exit from this call and shift it to 16,800, which is available for almost nothing. It's about 7.5 really. Yeah, right now all the strength, whatever is coming from IT, which is having a big breakout situation. Being a Wednesday, being down 5 points at the open is not too terrible. And right now what is happening is the puts are not compensating for any of the calls price movement. It's just calls that are changing price the entire time. So better to roll away the calls than try moving up the puts, because the moving up the puts is not really doing anything. So we'll keep you posted. Time is 10:06. Okay, another day of taking a stop loss, cut it out at about 0.75%. Reason for that is today is not the kind of day that I'll be able to manage. Right now, what looks like a perfectly sideways day is not exactly that. We've had IV expansion on the calls and IV expansion on the puts, and then neither puts or the calls losing money. Really not much premium. Once again, we're in the same situation. We keep heading higher. We're at an all-time high, but calls which are 50 points away, just not pricing in any kind of risk at all. And into up moves, you don't see put options losing value. So all of that put together, and main reason being, every time I'm trying to adjust my position, I'm losing a point. Like even if I do absolutely nothing, and just want to shift my calls away or shift my puts away or bring them closer, to slippage, I'm losing almost about 1 point. It's like 50,000 rupees each time I want to change my position. And in all, and to top of all that, it's not like the hedges are very cheap. The 16,000, 17,000 hedges also, it's not like they're very cheap. So those will also lose me. So all said and done, I'm just deciding to take a back seat. And wasn't the best base to start with, but I'm just going to cut it out here. And here, if you can listen to my entire rant, you'll also understand one of the reasons of cutting out is I'm feeling slightly frustrated, and best to sit out at that point of time. So anyway, I will catch you for the expiry. My plan is for the expiry trade, I'm going to be like super risk off and capture absolute pennies. Like even if I don't make any money tomorrow's expiry, I'll be fine with that. Maybe have like a super mega target, because I will have to reset a little bit. and also wait for better opportunities and strictly trade on days where there are very good opportunities. And even as far as entry is concerned, I think invariably I'll have to reach a point where I only enter into IV spikes. So basically track the price of different spreads and into an IV spike, try to take an entry. But that will come with its own set of headaches. I might have to make slight modifications to the way I trade, and that will be an inevitability. But I think overall, as far as the system is concerned, I will be following the same system, and I might also start allocating a little bit more to positional trades, which are fully hedged in the form of calendars, because you see India VIX, it's as far as as long as it trades below 15, I think calendars and double diagonals, things of those nature, allocating about 15 to 20% of capital to that will be a sensible thing to do. So that's going to be the plan. And yeah, today another day of the stop loss, but that's all right. It's better to cut it off early and not to deal with, especially when you know that you're getting a little bit on the frustrated side, best to cut off. Oh, also just to add, yesterday after exiting my monthly trades, I entered trades for the new month, which is basically covers on shares that I have. So Reliance, Larsen, on the Nifty Bs, on HDFC Bank. These are all, so I sold these calls. These calls are bleeding because once again they're heading higher, but that's fine. It means that I'm making overall much more of a profit because it's a covered call. And as long as these calls remain out of the money, I am not going to do too much to adjust them. And yeah, thank you so much for watching. Take care. Bye-bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.